Hello and welcome back, guys. So in this particular session what we'll be doing is that we'll be looking at what TAD is. Okay, so there is two method for it, right? So basically what we have been given over here is sales, and then we've got the variable cost. After that we can get the EBITDA, right? So EBITDA is 1000, right, as you can see over here, and then the tax rate is 25%. There is some tax savings as well. In the method 2 as well, it's just the same thing, right? EBITDA is computed similarly. I'll just copy the formula down and across, right? And then we just subtract TAD and then EBT, that's earnings before tax, and then we subtract the tax, and then we get the EAT, and then we just add back the TAD in method 2. That's the difference, main difference. But how do we compute it? Let's say the machine costs 1800. Okay, 1800. So the machine is costing us 1800. Okay, 1800, right? So what will be the depreciation for it? Okay, so this is the basic layout. My focus is only on TAD today. That's why I have not done, like, I have not increased the sales by any value or anything, right? So not adjusted for inflation or anything, because I just want to focus on TAD only. So what will be the depreciation? Sorry, it will be 1800 times 0.25, right, into minus 1. Okay, I'm just doing it in negative figure. Okay, what will be the remaining balance? 1800 plus this amount, right? 1350 will be the remaining balance, right? So since this is a straight line method, we'll be doing reducing method later on. What we'll do, we just copy the formula across, right? It will be 450 for every year. Right, in the second year what will happen? The remaining balance of the first year plus the depreciation for the year, we get the remaining balance, right? So we just copy the formula across, right? In the last year we'll have zero balance, right? So what will be the TAD in this first case? In the first year it will be the depreciation amount only, right? Because we are just assuming that like tax allowable depreciation will be 25% only. Okay, so we just copy that across, right? It'll just be the same figure, right? And then how much will be the tax saved on this? You will be saving this amount into minus 0.25. Okay, so why are you getting it in positive? Because you will get that tax back return, right? Because you see, when the depreciation is basically being deducted, you will be making some money out of it, right? So in that case you'll be making this much saving, right? Because you're reducing how much? 450 from your taxable profit. That's why you will be making this much saving. In method 1, what do we do? Basically we'll have EBITDA and then we compute the tax for it. So how do we do that? So this amount into minus 0.25. okay, it'll be 250 every year, right? So you see, this amount is not adjusted for depreciation, right? That means we are paying higher taxes, right? We are paying higher taxes. That means we are paying higher taxes. And then what would happen? The depreciation would allow us to make some savings on it. So the net effect is what? It's just minus 137.5. okay, so that the depreciation would bring in the positive tax savings on the tax allowable depreciation. That's why we have this figure. Okay, tax savings. Okay, so in that circumstance what will happen? Basically after that you just add it up, your NCF will be this amount. Okay, and another thing I wanted to tell you about is that your this total figure should be 1800 or whatever the value of the machine. Okay, that's how you can check it as well. You see, the TAD is 1800, right? Your machine costed 1800 without selling it or anything, right? That's done, right, for first method, for a straight line method, right? So similarly what we can do is for method 2, what we will do is we have the EBITDA computed as such. In this method we subtract the TAD. Okay, in the other method we did not subtract the TAD, right? We computed the tax on operating profit, this much, and then after that we just added the tax savings on TAD, right? We did not subtract in this case. In the second method what we do? We subtract the TAD. So how much is our TAD? Our TAD is this much, right? The same figure. So just copying that across, right? Copying that across, we get same figure, and then just adding it up, sum of operating profit plus less TAD we get the same figure, right? 550 everywhere. After that we charge tax on it. So how much will be the tax? This amount into minus 0.25, right? So the same figure will be true for everything, right? Every other year. Then after that we just do the sum as well again, right? So that's just the same formula, just copying it across as well, we get the same figure, right? Now what do we need to do? We need to add back the TAD. Okay, add back the TAD. So we have to do not minus, it's positive, right? So since this is in minus, so I'm writing minus at the beginning. Yeah, you see NCF over here, bold, this NCF is also same, right? You see the figures are same, it's looking same, right? You see the figures are looking same, the figures are same, the figures are same, right? How's that happening? How's that happening? You see in this case, how much tax are you paying? 137.5, right? In this case, how much was it? 250, right? In the beginning. Why did that happen? Because in this case you are reducing TAD over here. You see the TAD is being reduced from 1000. In this case, what had happened? We had not reduced the 450, right? That's why we are getting 250. We are paying higher taxes. But you see what happens is you pay 137.5, right? And then after that what happens? You add back the TAD. Okay, you add it back as if like the cash flow has not occurred. Okay, because you see in depreciation it's not a cash outflow, right? It's the cash flow is basically within the business itself, right? So what are we computing over here? We are computing the cash flow, right? So since the cash has not been gone out, it will need to be in our cash flow, right? That's why we are adding it back. Okay, first we deducted it. Why did we deduct it? For tax purpose. Okay, for tax purpose only, just to compute this tax. In this case as well, you see, if you see the net effect, it will be 137.5. you see over here, you see there is a sum over here, 137.5. it will be same thing, the tax will be same. Okay, and then you might be confused with why are we adding it back, right? Why are we adding it back? You see, how much is your EBITDA? Is 550, right? And then you have like this 550 does not, it already has, what has it deducted? It has deducted the TAD from it, right? So now what are we assuming is that the depreciation has been expensed, right, in 550. But what has happened? The depreciation has not gone out anywhere, right? So we'll add it back. Okay, that's what we are doing basically. See through the numbers, huh? Even in this case as well, if you add all this thing up, 450, it has to be the amount or the remaining balance of the machine. Okay, so in this case it was 0, that's why everything has been used up. Okay, so that's pretty much it. So let's look at another case where using method 2 and method 1 and method 2. Okay, since we've got the same sales, same variable EBITDA, same tax rate, just the depreciation rate is a bit different. Okay, so 1800 is the purchase price. Okay, so what will happen is 1800 times minus 0.15, right, minus 270, right? So that's just going to be same thing for every other year. And then 1800 plus this amount will give us the remaining balance, right? And then in this case 1530 plus the second year's depreciation will give us the value, right? In the end, how much do we have? 720, right? How much shall we sell it for? Let's sell it for 500. In that case, what will happen? We are making a loss, right? We are making a loss. If we had sold it for 800, we would have made a profit, right? So since we are selling it for 500, what has happened? We are making a loss. So the tax allowable depreciation will be how much? It will be this much. It will be the same amount. Okay, and then it's true until year 3. In year 4, what has happened? We've sold the machine for a loss, right? So in that case, what will happen? We will be getting this much will be our tax deductible, and then how much are we also allowed to deduct is the difference between the loss minus the 720. Okay, so that will be minus 120. Okay, is it 120? 220, 220, right? Let's just compute. Yeah, let's just see how much will the total be. Will be 1300, right? You see, now if I sum it up, there is one way to check it. Okay, so how much is the machine costing us in the beginning? 1800, right? How much did we sell it for? 500, right? So there is a remaining value of 500. How much did we use up over the period of it? 1800 minus 500, right? So basically that was the depreciation or depreciation that we were allowed to basically deduct, right? So how much did we deduct? How much were we able to deduct? 1300, right? So basically we've used off 1300. There is still remaining value of 500 in that, right? So that's why you see over here it should be 1300. This amount and this amount should be same. This amount and this amount. The buying minus the selling amounts, the selling amount should be the remaining value within that machine. Okay, that should be there. Your depreciation should be should reflect that. You see, if you add all this thing up, you'll have 1300. How much did you sell it for? 500. What was the difference between 1800 minus your total depreciation? 500, right? So that's why your value remaining within that machine is still 500. Worth is still remaining in that machine. That's the trick. Okay, always remember. Whereas if you were selling it for, let's say, 800, right, what would happen? You would have to pay a charge in that. Basically you are making a profit out of it, right? So in that circumstance, what will happen is that basically, so 270 plus how much profit are you making? 80, right? So plus 80. Okay, so that's how much you will be making. So how much did you sell it for? 800, right? So how much was the remaining value? 1000. You see, you can check it as well. You can check it very easily. In the 4-year period, what has happened? The value was the remaining value in the 4th year was 720, right? How much did we sell it for? 800. So just imagine how much did you how much value is remaining in that machine? 800, right? So what did we do? We just computed the total value. Okay, how much did we use it up and how much is remaining within that machine? So 800 is remaining, right, out of 1800. So 1000 is the remaining value in that, right? So that's the remaining value, or what we can say is how much did we use it up, right? 1000. So 800 was the remaining value in that. Okay, so tax saved will be how much? Will you be getting a will you be getting a tax savings of 270? No. How much will you be getting? 25% of that, right? So it will be this amount into minus 0.25. Minus 0.25, we get a positive. Why? Minus into minus will be plus. Okay, why are we getting a plus? Because this is our tax saving, because due to that depreciation there was a tax shield created, right? So we don't have to pay tax on the depreciable amount. So how much are we getting? 67. All these figures are there, right? But what has to happen? You have to pay taxes on the operating income as well, right? In that, how much are we paying? So 1000 into minus 0.25, right? We are paying 250. Copy it across. We are paying 250 every year, right? And the tax saving from the depreciation, we are getting this much, right? So method 2. In the method 2, what do? We subtract the TAD, right? So we subtract the TAD. What's our TAD? Just copy the figure over here. It's the same thing, same figure, right? And then just adding up the EBT. So summing it up. And what's the tax on that? So it's a reduced amount on which we are paying tax, right? Because we've already deducted the depreciation. What's the EAT? It's the same thing, just adding two of this thing together, the after tax and then the other figure. Copy it across, right? And then what was the TAD? Just add it back as well, okay? Because we deducted this TAD in this situation. Why did we deduct it? We deducted that just to we deducted the TAD over here just for calculating the tax only, okay? Just for calculating the tax purpose only. We deducted that just for tax purpose only. So Based on that deduction, what did we get? The tax figure was lower. In this case, what had happened? We did not deduct the 270, right? We are paying taxes on 1000, so 1000 into 25% was 250, whereas we are calculating 730 into 25%. That is less amount, right? So how is that? Why is that happening? Because we are deducting the depreciation. In this case, what had happened? We did not deduct the depreciation, right? What did we instead do? We simply computed how much tax benefit will be getting from that depreciation, and then we just adjusted just the tax only, directly, just the tax only. So in this case, what did we do? We paid less tax, right? And then you need to add back the depreciation. Why do you need to add back the depreciation? Is basically your this figure, this EAT figure 547.5, it does not include the 270, okay, because you see you've deducted it, right? But that cash flow has not gone out of the business, right? In a depreciation, what has happened is that it's a non-cash expense, right? It has not gone out of the business, so that's why you need to add it back, okay? That's why. Okay, so since you've deducted it for tax, for calculating tax, now you need to add it back. Okay, now you see the figures are same. In both the method you get the same thing. Okay, so it's as simple as that. Not so complicated, right? Very easy. So we go for reducing balance method now. Okay, so in this case also it's basically same thing. We compute the depreciation, 1800 minus 0.25 into 0.25 into minus 0.25. So how much are we getting? 1800 plus this figure, right? And then in the second year it will be how much? 1350 into minus 0.25, just to get that minus figure. Okay, and how much will be the remaining balance? It will be first year's balance, ending balance, plus this year's depreciation, right? So we just copy the formula across, right? So we are getting this much figure, right? I'm not doing any changes or anything with the thing, point decimal and all. Okay, so how much will be the TAD? The TAD in this case will be same figure but in minus. So I'm just doing it for normal scenario in this case, Control R. So how much is the tax saved? Is this figure minus 0.25. Okay, so we are saving that much tax, right? And then what else? How much is the TAD total? Why are we doing it? It should not be minus. It should be minus in minus. Okay, how much are we paying? 1230 point something, right? So 1230 point something. It should be 1800 minus this figure, minus 1800 should be 1230.47, and then this total should also be 1230.67. Okay, so it should be together. It should be same amount. So you could just add in over here. You could just say like Control X, Control V, sale. Let's say we sold it for, let's say in loss, 500. Okay, so let's just copy one thing from here as well, just this thing, so that it's easier for you guys to understand. Okay, so what's happening over here? So if this amount is greater than this amount, we have a loss, right? Because if the remaining balance is there, it's worth 570, but you sold it for 570, loss, right? So what we can do is, let's just make this thing in not a decimal. What am I even doing? Okay, now it's better, right? Now it's better. It's very close, but yeah, okay, now it's better. And then what has happened? Now we are selling it for loss, right? So what was our purchase price? Purchase was 1800. What did you sell it for? Sale was Control X. What was the depreciation? The depreciation that you charged like throughout its year is all this figure, right? It's all this depreciation figure, right? And then what will be the remaining amount? This figure plus this figure, right? Minus depreciation, right? Purchase minus your depreciation. So you will be getting 570, right? That's the current balance that it should have, right? So what has happened? How much did you sell it for though? You sold it for 500, right? Remaining balance, but you sold it for how much? You sold for 500, right? How much loss are you making? 70, right? 70 loss, right? So you see, if you add these things up, you'll have 1230, right? What you should have is 500, 1300. Okay, so what you should do is just add in 70. So what you should do is, this TAD figure should be adjusted. Okay, this TAD figure should be adjusted. So let me just sum all this thing up, and then let's just remove that. Let's just add in this figure over here, and let's just remove the loss thing as well, right? So you see, the value should be sum of these things, right? So right now it's 569 point something or 570, let's just say that, right? So the remaining value in this thing is 570. It's similar to this amount, right? It's same as this amount, right? But you see, now what happens is, now since you're making a loss of 70, right, you will be given a tax relief on that as well, right? So how do you compute that? So in order to get a tax relief on that, you will need to increase your TAD amount, right? So you will be getting a it can be deducted, right? It can be deducted because you are making a loss, right? Remember, you will get a credit for any losses. So how much loss are you making? So we are making, in the year we charged a depreciation of 190, right? And like, it's like doing a plus, you know, it's like doing a plus, because minus and minus will be adding up together, right? So it will be 190 plus 70. Okay, that's the loss amount. So how much did you get? 65, right? Now you see, the sold amount is 50, and if you sum all this thing up, it should be 1300. Okay, it should be 1300. Or what you can say is, this amount should amount to how much? How much did you sell it for? 500, right? Sale. How much should be the depreciable amount over the life of it? You have used over 4 years, you have used 1300 worth of that machinery, right? So the machinery was, worth of it. How much did you use? How much were you able to get depreciable? How much were you able to use that machine? Around 1300 worth of it, right? So how much did you get over here? 1300 as well, right? So this amount should be same, huh? This amount and then this amount. The purchase minus your selling will give you the uses of it, right? So the uses value and your total TAD should be equal. Okay, it should always be equal. So similarly, in the method 1, what do we normally do? We compute the tax on operating profit, right? So on EBITDA, you can say that. So how much is that? 1000 times minus 0.25, right? So it's 250. For 250 for everything. We've got this value from where? We've got this value from this tax savings over here, right? So tax savings we computed based on TAD, right? So we will be adding that up because we are getting that because our tax liability will be reduced of it. That's why we are making it in positive. Okay, so we are getting 862.5, right? And all this other figure, you see. I'll just remove all. What am I doing? It should have been 0. Yeah, okay, I'm just doing that. So in this case, what will happen? We just sum this thing up. We just compute the EBITDA. Control R, right? So what's the TAD? It'll be same figure. You see the TAD that we computed, just the same figure. We just copy that figure across, and then we just sum this thing up. Right, Control V, and then this will be into minus 0.25. okay, Control R, and then how much was the TAD that we received? Was minus. Why am I doing minus? Because you see over here it's minus, right? So minus and minus will be plus, that's why, right? 450, and copying it across, and then just making this 0 decimal places. You see the figures are same, isn't it? The figures over here and the figures over here are same, right? So the only difference what has happened is that basically we reduced the TAD and then we computed tax where the tax liability was less, 0.25% of the operating profit, right? And then what did we do? We just added back the TAD. Why did we add it back? Because it's not a cash outflow from the business, because this 550 does not have that TAD within it, the depreciable amount. It does not include, but the business has how much? 1000 rupees within it. Okay, it's not 550, it has 1000 rupees in its bank account, right? So what happened? So if you subtract 450, your remaining balance will be how much? 550, right? You're assuming it only. Okay, this is not a cash outflow, that has not happened unless they say in the question. Yeah, that's another thing, but yeah, it's not. You still have 1000, but what has happened? Your tax liability is 137.5, right? So after you pay your tax, you will get your profit amount, right? But you will still have that depreciation amount in you, right? So what you need to add? You need to add it back, because you still have that money in the bank, right? So you just add it back. Okay, you just add it back. So this first method and second method, it will be same thing, right? That's pretty much it. Not a big thing, not a big thing, right? So that's how you account for if there is no sale. What do? You just do 0. You just do 0. Okay, and then what do? You just don't subtract anything, you just do 190. Okay, so you see we are getting a say amount of this much, right? So what should happen? The sale amount should be 0. So what will happen? You will get 1800, right? What am I doing over here? Okay, so if you sold it for scrap without 0, okay, let's just say like we did not sell it, or like we use that asset up, or okay, let's say we sold it for 0, right? So we sold it for 0. What was the loss? How much did we use up over its life? We used 1800, the whole thing of it, right? So what has happened? So in this year, what we should do? We sold it for 0, right? Or we did not sell it, let's just say it just got damaged, right? So what do? We just add minus 570. Okay, we just adding it up. So minus 190 minus 570 will add it up. Okay, so minus and minus adds up, right? In this case, so 760, right? So you see the value, the total TAD or total depreciation that we were allowed to claim was 1800, and what's the value remaining in it? It's 0, right? And how much did we use up over its life? 1800. Okay, so purchase minus selling price will give you the used value of it, and that value should match up with your total TAD. Okay, it's as simple as that, very logical as well, right? So you see the 940 is the same amount in both the method. Okay, so that's how you compute this thing. It's not very complicated, it's very easy. If you understand, try and break this number over here. That's the main point. Like this 1000 and this 550, just think about it. Since you're deducting TAD, that means you are paying less tax. You see, in the earlier thing you are paying 250. In this case, how much are you paying? You are paying 137. So what has happened? You are paying less tax because you deducted this TAD, right? So since you paid less tax, what has happened? Basically in this case as well, you're only paying 137.5. If you see, if I just sum it up over here, you see the net effect is only minus 137.5. And why are we adding it back? Is that we've reduced it by 450, but we still have that money in the bank. Why did we reduce it? Just for this tax purpose only. Okay, so it's just another method of doing it. That's all it is. Yeah, just go through it, just read through the numbers. If you have any confusions, do let me know. I'll definitely help you out. That's it for this video. Take care. Bye bye.